Hey guys, I have a question for you. How do you spread abundance? This year, Joe and I are spreading even more abundance by giving out insights on money, wealth strategies, and resources in our current newsletter, Creating Abundance in 52 Weeks, that we want to share with you for free. So sign up right now as you're listening to this episode on our website at www.abundantculture.co. That's .co/newsletter. www.abundantculture.co/newsletter. Don't let delay get in the way of your abundant year. Now, back to the episode. Welcome back to Abundant Culture Podcast,
where we dissect the mindsets and tactics of the true beasts of business.
People like Gary Vee, Grant Cardone, and Warren Buffett.
All to create a blueprint to experience life more abundantly.
Welcome back, everyone. We are on part 2 of Melvin's episode from last week. We covered so much last week, but this week we are going to continue the conversation on credit, some myths about credit, the techniques behind business and personal, and so much more. So get ready to listen to and learn from our good friend, Melvin Johnson.
So what are, I guess, some of the myths that you hear about, whether it be personal or business credit, things about credit in general? Like, what are some of the common myths that you hear people kind of say a lot that in your research you found not to be true? Because like you said before, we grew up, oh, credit cards is bad. And then you get a credit, the same person who told you the credit was bad, get a credit card, they max it out, and then all of a sudden credit is bad, but you use the credit. So it's like all these like myths about credit and debt and all these different things. And I know that you've utilized debt in a way that most people never have. And I just kind of want to know what some of those myths are so we can kind of debunk those for a lot of our listeners and viewers who may have heard those myths.
Yep. So I'd say, you hit it on the head with the credit is bad. I think that's the number one thing. I mean, if credit is bad and cash is, that's got to be evil, because when you run out of it, you depressed. At least when you run out of credit, you could, God forbid, you could go file bankruptcy. You know what I mean?
Yeah.
When your cash going, that hit different.
You ain't got nothing to do. Yeah,
you ain't got nothing. So, but I would say that would be one. But another thing is, I hear so much bad stuff, and I'm like, who told you that? Or like, why did you do that? Like, let me see, I was onto it before I went off on this spiel. But one of the, I wouldn't say the biggest, but it's one of the myths that I hear a lot about credit is the 850 thing. I think that gets me the most, because we don't understand how like credit works. So a lot of times we shoot, like I hear people a lot of times say, oh, I want to shoot for 850 and stuff like that. And I'm thinking, well, the likelihood of you actually getting 850 probably is really low, because your credit, what people don't realize is it's comparative or comparable. However my wife chooses to make me say one of those words, but it's competitive, right? So your score is being also weighed against other people that like are in similar situations.
Oh.
So yeah, everyone can't have an 850 credit score, because everyone would have an 850 credit score. You would have there has to be a standard, so to say, where the people are excellent. So if Jasmine has had an account for 10 years at Chase and Joseph has had it for 20 years at Chase, neither one of them have missed payments, but Jasmine has, 4 other accounts that are equally as old as that 10-year-old account, but you just have 2 accounts, and one is 20 years and the other one is 10 years because you got drunk one night and you applied for the credit card and just got stuck with it. And then when you actually learned about credit, it was, 10 years later, you got another credit card or a loan, and, her score is going to be significantly higher. Why? It's just like traditionally or practically, who has more credibility, the person with no kids or the person with 2 or 3? It's probably going to be the person, in terms of with watching children, it's going to be the person who has more experience, right? It's not, now obviously we got some terrible parents out here who has 2 or 3 kids, and, and we have some terrible ones that would be terrible if they had kids that don't have any.
Right.
But for the sake of the illustration, it's really it's competitive. So it's how do you weigh against other people that are same age, same, I don't think they do race. And they say they don't, but to avoid discrimination laws and stuff like that, but they do. You know, my wife, I'm a prime example. I have more files on my credit than she does, but yeah, her credit score is higher because she's not being weighed. She's obviously not being weighed against me. You know, she's being weighed against a different metric. You know, so the debt affects it. So not everyone can have the 850 credit score. I mean, it's just the closest I've seen one 850, and then I saw a guy who had an 848. You know, who had, in my opinion, had a better credit file. You know, but then there's just different variables in there. So, you know, that doesn't exist. But so that's one. Another one has to do with like the dispute process, because I don't think I've heard anything that has been completely outlandish, but the dispute process with certain things with, like, I hear people say, oh, I can get this off of your account in 30 days, or, you know, and it'd be a person have 25 negative items on the credit report. And I'm like, oh, what one do you got? You know, like, shoot, Harry Potter can do that one. You know, the Fairly Odd Parents can do that one. But nevertheless, you know, I'm just wondering, like, but so a lot of it deals with like a person not knowing the laws. Like, they get on YouTube and they learn a little bit about credit. And that's the one thing I think I have against YouTube, is that it does not teach you laws. When you go on YouTube, the most you're going to get is you might find out what a 609 letter is, or the law, the 609 law, because the letter is really just a dispute letter. It's a debt validation. You might get a 611, you know, asking for an investigation, a formal investigation. So you're not claiming that this account isn't yours. You're just saying, hey, I need you guys to investigate for me because some of this stuff looks suspect. You might get a 605B when people are talking about like credit sweeps. They probably won't say the section where that law is listed, but a lot of times, you know, people are just on there and they're preaching 609 letter, which is debt validation. So this isn't my account, you need to validate it. But what they're doing in spirit, they're practicing like a 605B in implication. So it's weird. So they're saying that the account isn't theirs, but it's really fraudulent, like what they're doing, you know, because it's, you know, 60. So a lot of times it really has to just deal with that. I mean, the credit is an evil thing, is bad. I think that's something that I hear, the myth, that it takes long, or it doesn't take long. You know, credit is definitely something that you have to like smooth out. It's like a ball of dough that you make peace into. You know, it comes into this little ugly form of thing, and it comes out to be something over time because of like physical labor and work. You're massaging it and you're waiting, and eventually it rises to be something that, you know, you want it to be. But you have to put things on that to make it a piece of. You know, it's not going to be that. So credit is very much like that. You know, I wish when I opened up my account 2 years ago, I would have opened another one or two more possibly, and I didn't. You know, so now I got the discrepancy between age, and it's only a year, right? Which affects me only in the short term. In the long term, it won't matter that one account was open a year after the other one. But, you know, those are some of the things. The authorized user is a bad thing. I'm starting to hear that. I'm getting.
Yes, talk about authorized users.
We was gonna ask.
Yeah, I'm starting to hear that one too, you know, and the reason why I think that I always tell a lot of people, they don't know what they're doing with authorized user accounts. You know, there's no law forbidding authorized user accounts, and there's no law for it. It just is, you know.
Yeah.
Piggybacking is something that people have been doing for years. I mean, that's what they called it on CNN when they did a special on it about 10 years, 15 years ago. But authorized user accounts are pretty much, they're an account that you become authorized to use. Yep. And
I mean, it's hard to simplify it from there.
Right, you know, you're authorized to use. Now, what we see a lot of times in like the credit space, whether that be on the business or the credit, because you have authorized user accounts on the business, I'm not seeing them be as popular as they are on the personal side, but or as impactful as they are on the personal side. You know, but your authorized user accounts are, you know, accounts that you might have an individual, say for instance, you had a low credit score, and I don't want to say bad, but you just had a low credit score because you didn't have any credit. So I got a guy, I'm say his name, but leave out. His name's Jabari. Okay, he didn't have any credit at all. Okay, so what we did was, based on my trial and error, primaries don't exist. That's what I will tell. Let me say that. If you are watching this video and you get on YouTube and, you know, somebody's talking about primary accounts, they do not exist. They just don't, they did maybe 5-10 years ago. They don't now. So if you are paying thousands of dollars, like I did, for some primary accounts that don't exist and borderline illegal. So I'm not proud to say that, but I didn't know that. It's just one of those things where the account does not belong. It's just not a real account, right? It just doesn't exist because they don't ever, I waited around 6 months for a primary account that just every week I was getting, oh, it should hit any day now, So primary trade lines are trade lines that would belong to you. So credit cards that you open up in your name, a mortgage that you open up in your name, a car loan that you open up in your name, those would be your primaries, right? You can have two primaries on one account if somebody co-signed for you. That would be their account as well, or they went on a loan with you. So that's a primary account. So it's hard because backdating is illegal, right? So it's hard for a company to provide primary trade lines if they're giving you 3 years worth of history. You didn't have the account for 3 years. Okay. Yeah. Now, what you do see, which is there's nothing that forbid it or that allows for it. But what you do see is if say if I gave you $10,000, we had a written contract up, and you were making payments on it every month. People do this all the time seller finance, right? Yeah. People do this all the time. And you came to me, now I know this, you came to me and was like, man, my credit bad. I'm really looking to buy this house, but only thing I have is this paper saying that I've been paying you for however long, 2 years, let's say 2 years. Yeah. If I'm smart enough, what you can do is you can do a UCC1 filing, because that is a document that protects like a person's beneficial interest in whether that could be anything, a trash can for all I care. What you do is you put a lien against that's what banks do. They put a lien against your property. You have to, if you buy a property through a bank, you have to satisfy that lien before that lien can be released and you can own that property outright. So people can do that against people, right? You can go to the courthouse. It's not a complex process. You can go, and I can go down to the courthouse right now, literally go, Joseph Mims, if I have all your information, I can go down and say, I have a lien against his car or his house, and that lien will pass. It'll be public record. And because it's public record and we know that the credit bureaus, I don't know how they do it, it's illegal, but they get information all the time that they're not supposed to get via a third party, like a bankruptcy. That's public record at the courthouse that they can get access to, but that data isn't sent. Any courthouse will tell you we don't send data out to anyone. They have to come in and we don't distribute that information. So when bankruptcies show up on a credit report, it's just an instant red flag that's illegal. But they get away with it. Same thing about a UCC1 filing. If I wanted to put a lien against anything now, in that case, that can help you because you have been buying this property from me for 2 years, although we haven't recorded it via like your credit, you have been making payments. So what I can just put that down as is it'll go under your credit report as like a personal loan or something like that. And it'll report your payment history, on whichever bureau they decide to, whatever bureau picks it up, it'll start reporting, that income. So you can do a UCC1 filing, but outside of that, primaries, they don't exist. Now, authorized users, that's another thing. Person has good credit, another person has lower credit or bad credit. What the authorized user account does is it helps to, I don't want to say manipulate, but it does. It helps to manipulate the algorithms that is associated with your credit score. So if you're an authorized user on an account, that account to the algorithm looks as if it's your account, your actual account. So if a person had a credit card for 10 years and you become an authorized user on that account is going to report on your credit report, and it's going to give you that usage, that utilization. It's also going to give you those years of activity, history is what we call it, and the payment history. So it's going to help you in so many ways and it's not going to be an inquiry on the credit report. It's just going to be an account that appears and it's going to impact your credit score. And for lending institutions or institutions across the board, whether it be, just getting an apartment or something like that, those institutions are going to, look at that and they're going to be able to make a better decision based on you having an account like that. Because if somebody else trusts you to be an authorized user on their account, it's probably a
Mhm.
good bet that they can trust you with some kind of finance. And now the days are winding where you only needed authorized user accounts because, there was a time where if you had a $20,000 card, I'm about to get approved for a $20,000 card because I'm on your $20,000 authorized user account.
Yeah.
That day is without strong primaries, that don't work. It's going to factor like, I had an authorized user account before I went with American Express, and they were like, man, we're so happy that you've been with us for like 18 years. And I was like, what? I wasn't with you 18 years, but so a lot of it, so their system still reads that account as being yours. So when you're looking to apply for new credit with them, they're going to go, oh man, of course, because banking is all about the relationship. We're going to give you a higher limit than we would give somebody who wasn't with us 2 days. Your limit is going to be significantly different because of that. So yeah, I would say that those are the biggest differences with authorized user accounts. Some mortgage companies are getting away. They're developing systems where they can read what your credit score is, despite having the authorized user account on the credit file. Not all have caught up yet, and not all make that a determinant factor with determining whether or not they're going to lend to you. But they are developing models with that now because it's all about people abusing it, the system, and that has worked for so long. But getting authorized users to go buy a car and defaulting on it in the first 13 months is, and you may or may not hear, to the person who's looking to increase their credit score to obtain a mortgage, proceed with caution. I'm not saying that not to do it. I'm not saying do it. I'm not, that's my disclaimer. What I'm saying is you don't want to if you don't have decent credit without it, because some people are like 700s and they just want to go 720 because that's like tier 1 credit for the rates that you'll get. So if you're that person, shoot for it. Doesn't really matter. Or if the person is your relative, it really doesn't matter ever. But if you're going and you're purchasing that, proceed with caution, because one of the things that you have to realize with a mortgage is it's just like if you go and tell them, hey, I make $100,000, and you go print up some phony check stubs and you give it to them, or some phony bank statements and you give it to them. They may or may not close the underwriter. It may slip by the underwriter, and then it may come up later down the line when you have the loan, and now you're in some trouble. The same thing with authorized user accounts. If it can be seen, I have not seen the case yet. I have not seen the case, but I've been doing a lot of reading on it. It can be seen as mortgage fraud, that you are using something like that to increase your credit score. And then after you obtain the mortgage, you remove the authorized user account, and then your score goes back to where it was at. Now that can be seen as mortgage fraud because that actually wasn't accurate information that you gave them on your standing, your financial and credit standing. And if they wanted to, they could proceed with litigation at that point. So that would be my one tab. If you're at 620 and it gets you to 680, just leave it alone. Unless it's a relative, it's your mom or aunt, a close friend, then it really, because that you can go back to that person and say, hey, I need you to, I need to be authorized, or can you vouch for me, or something like that. And that's a better time than if you're paying for it online and you don't even know the person, and you're in some hot water at that point.
Yeah.
So do you have any recommendations for like cards or any sources of funding that either you recommend or maybe you just like, in your personal opinion?
Oh, I love Amex, man. I do. I think that is because Amex is so great, and this is why they're great, because they are great. But Amex is great because so one of the things with them is, if I didn't know this until I got with Amex. So when you get approved for a business credit card or a personal credit card, those are the only inquiries you'll ever have from them going forward. They will not pull your credit anymore to get you a new card with them. And you can get up to like a five card. It's like Chase does a 524. Amex, I have 4 with them. I've not seen them they've not stopped me. They've told me, oh, come back in 90 days. So I'm pretty sure it's probably like 5 with them as well. But they don't pull credit, but one time for those cards, each individual, business and personal. So that's phenomenal. And also, if I'm correct, they also do that with they also do that with your business. So I got a guy funded. Joseph, you talked to him one time. His name was Brandon Perkins. His name was Brandon Perkins. He's a good guy. He lives in Ohio, truck driver, and he was the one that talked about Shell Corps and how they function and stuff like that.
Uh-huh.
And so when he got approved, this was another situation that had me scratching my head, which is why I'm telling people, everybody got all these recipes, and it really is situational. Now, my credit file was better than his, right? I had stronger accounts, older accounts, and my score was even higher. When he got approved for his American Express card, his business card, American Express also sent him an offer to help his business with funding. So they sent him a $25,000. He had $25,000, not only his credit card, but he got $25,000 loan with them. And if it was repaid in a month or 2 months or 3 months, he only had to pay. So it went from 0.25% up to 1% that he would have to pay over that time span. And I think the math on that came out to be like at most $300, if he chose to use that money over the course of 3 months. So for him, American Express, they didn't pull credit again. He didn't even provide financials, for that. They just approved him, and that was it. So when I called, I was like, wait a minute.
Where's my money at?
I was like, hey, I could turn 30 grand. I could turn that back around, because the way that my deal was working with one of my asset-based lenders, I could have spent $30,000 in, a month and turned it back around, and that's only going to look good on their end. So, but I think they had told me I had, when I went for funding, I had something happen with like 3 credit cards with him, or 3 or something. He had 2. So it's no recipe. You know what I mean? Yeah. They can pick and choose who they want to extend those offers to, and they extended it to him. So he had $25,000 to work with. So that's one of the things I like about American Express. They do all kind of programs like that. They do revenue-based lending. They do, short-term loans like that. And once you're in, you're in. You don't have to worry about, qualifying again or something like that. If anything, they'll adjust the line. So I think his line had went, because he hadn't used it. It went from like 25,000 to like 15,000, because he didn't use it. But he can go in. All he has to do is click 2 buttons, and the money will be deposited into whoever his vendor is account. So if you're trying to pay a contractor like me, I'm paying my GC. So when I got approved for the small amount, and I will say it was a small amount, I sent that to my GC, and it was in his account. And so it's a good way to do some short-term financing, especially if you're working like a hard money lender or asset-based lender. That's like perfect. It's a perfect way to get your construction done.
So like in a case where you're an authorized user on an MX card, does that also mean that when you can get more approvals from an MX without the, like, what was it, the inquiries?
So I was an authorized user with MX. When I applied, I have 4 cards, but they only did 2 inquiries on the credit report.
Oh, okay.
So your business is separate from your personal. So make sure I didn't have any, because I personally guaranteed my business MX cards with the intent on building it, and then telling them, hey man, for 2 years or however long they required me to do it, display the level of responsibility with spending. And, I want this to stand on its own. So that's what I did. Now, and then personal, obviously it was personal. So when I got approved for the first one, I approved, I filled out for the second one, and then that was the end of that one. So it does help your chances, though, of being approved when you are an MX. And I can't say that for everyone else, like Chase or Discover, but I was an authorized user on the MX, and that's one of the things that they highlighted, like, oh yeah, thank you for being a user with us and I was like, oh, so it let me know that they think that, yeah, they think that.
Cool. So what's the number one takeaway that you want someone to walk away from this episode with? Because we touched on so much.
Yeah, I mean, because this is a faith podcast, that really integrates business into like everything that we do. I would say that, man, a lot of that comes from your ability to do any of what we talked about. Is from my perspective, my experience, because I don't like people who don't talk from their experience, but from my experience, a lot of what I've been able to do and learn via real estate has come by way of being guided by something that's other than myself at times.
Yeah.
Not to sound mystic or anything, but Joe he helped me to see this with real estate. and he, when he ventured out into doing business like outside of real estate, and it was just one of those things where this may be the thing that draws you in, but it's not going to be the thing that keeps you in, right? It's going to be other things, that I don't know. It's just like a fish, the thing that hooks you is the actual hook, the fish. The thing that keeps the fish in is a lot of things. It's gravity for one, but it's their inability to be able to adapt to that environment, to be able to flap out of it. They lose all of their strength when they're out of that element. And then a person, of course, of another force outside of themselves. So it's the same thing, the thing that hooks you in business. So not being so bent on doing one thing. If it's real estate, understand that you may have to build another business and come back to real estate at a different time at your life. I mean, that's just the reality of it.
Yeah.
I'm experiencing transitions right now where it's like, okay, if I want a stronger real estate, if I want to enjoy real estate more, if I want it to be more purposeful, I have to develop a credit repair business, or I have to develop a construction company, because my personality lends itself to knowing what it is that I'm doing. Like, I can't do real estate and not know what the code is for electric. My personality doesn't lend itself to that. I need to know that, right? Because that makes for good conversation when I'm borrowing money, right? When I'm talking to a lender, and now they know, and I've been blessed to not come across lenders who's needed to see me know everything about the construction component of real estate. They've only needed me to know about the number side of it. But there's coming a day or a time, or I've missed opportunities where I could have possibly raised more money if I would have shown myself approved, not only on the financial side of real estate, but then also the construction side. So when a question is being asked and they're like, oh, how long is this going to take? I know from experience, worst case scenario, this is how long it should take. This is what we're striving for. This is the kind of material we're going to use. This is blah, blah, blah. Because at the end of the day, we want to make people feel secure, as secure as we can make them feel.
Yeah.
So we know how we're going to invest their money that makes them feel secure, right? We know. And then I think that we can add, and that's just an additional step. Not every entrepreneur needs to know that, because that's not their call, their personality, but as for me knowing that is one of the things where if Jazz and Joe say, man, look like you slowing down. You bought 10 properties last year. You only bought one this year, or you didn't buy any. That's one of those phases of life in general where I think all of us go through, where us being inactive isn't necessarily indicative of like failure or success. It's just a different, you're transitioning between the unknown. You don't know what it's going to be. It might land you at failure. It might land you at success. You're going to learn from both, of course. That's that transitional phase where when you turn up the speed on the treadmill, you start falling back, falling back a little bit, and it's not that you're not running. You're still exercising. You're still after a goal, right? Whether it be a mile count or a time count. But that level of intensity is just increased, and your body has to become adjusted to that speed, acclimated, is a better word. So in everything, do not get too settled. And I know that credit, I don't know how that doesn't really necessarily mesh with the credit, but if you're going to be doing business, which is going to revolve your credit, and then also like financing, you need to be able to adapt and not be so bent on what it is that you want to do, because that will destroy you. That is what destroys a lot of people,
Yeah.
That's what you become greedy, not caring about other people, backbiting, and all of that. That's what comes out of this. But this is what I want to do, because when you are truly led, whether it be by the Holy Spirit that we see in believers, or you're truly led by serving other people, which I believe is a prompting of God. But if you're truly, wanting to help people, that's not going to come. It's going to come across your mind, because you're going to get tempted. Like I get tempted every day to take advantage of people. I'm no better than the next man. However, I have to make the decision every single day not to do that. It'll be the same. So
Yeah.
Absolutely. And I agree. I definitely agree with all the points that you definitely touched on. And I think being led by something bigger than yourself and more pure is, I think, what makes a lot of people successful. And I don't think a lot of people admit that publicly, but I truly see, like when I interview people, and I've been blessed to interview dozens upon dozens of successful people, like even if they don't say, oh, it was the Holy Spirit or it was this or it was that, like you could kind of tell, like you kind of get that energy from people, even if it's through a video. It's like, oh yeah, it's something that he has that the next guy that does exactly what he does not have. So I truly appreciate that. And since you're on the Abundant Culture podcast, we feel the need to ask this question to everybody who comes on, because we always get very unique answers. And that question is, whether it be in your personal life or in your business or even in your spirituality, how do you choose to spread abundance?
Making myself, and this is a tough one. This actually could have made me cry in this moment. Like I said, not to take advantage of people, but then also more importantly, understanding that operating in this space, you have to make yourself vulnerable to being hurt and backstabbed. And it's just one of, I thought, man, maybe if we do business, it's just one of those things, people, I always use the illustration of David and Goliath, David and Saul. Saul loved him, David, before he was anointed to become king, and after that he changed. And I always say people change when you begin the journey to becoming the person who God called you to be. People change, and it just happens. And whether they know it, that they're doing it intentionally, whether it's something in them that's blocking them from seeing it, it just happens. Like I'd hired a guy twice who stole from me. He stole from me, and the first time it didn't hurt because I was like, oh, I can fire him, and he worked good. So I made every excuse to bring him back because I was trying to use him, right? I wasn't really caring about his soul, his salvation, or anything. But then when I brought him back, actually it was 3 times, he tried to steal from me, right? But then I was upset, I got so upset, and I was like, God, I need to show me how to be Christ to this man, right? So I approached him about it. I said, hey, this is the last time you'll steal from me, X, Y, and Z. And I just got to hear his story, right? I got to hear how, he lost his kids and how he was like trying to get his life back on the right path, X, Y, and Z, all of that good stuff. And then, so the last time this was recently Monday, I had to let him go again because he stole something from me while I was gone. And that time it hurt me as a person. I was like, dang, I was like, that really, like, it wasn't even about him working, he was phenomenal, but I was like, it hurt me because I saw in him not the inability to really let go of the thing that was stopping him from being in the position he felt that I was in, because God's no respecter, of men. He don't love me more than he loved that guy. He might favor me in more situations, right? He might favor me over him in your house because he knows I'm not going to steal, and that guy is. And he might pull out something in you that God isn't necessarily ready to reveal yet, in terms of like anger or, impatience. So he favors me in that situation, but he doesn't love me more ever. He loves us the same. So just understanding that those situations come, and that's a minor issue. I think it becomes more sophisticated the more and more you excel in whatever it is that you're doing. So the backbiting is less about like stealing physical, but it's about stealing time, it's about stealing money, or it's about stealing ideas. It's understanding that is all a part of this journey, and not allowing that to detour you from being like true. And I've done that for the most part. And then there's times where I look and I'm like, I let that do to me the very thing that I never wanted to see in anyone else. So, just opening yourself up to be vulnerable, knowing that, you're going to be hurt in business, because that's just what business is. It can be very impersonal. It's not what it is, but it can be very impersonal. But if you choose to make it about, if you choose to make it personal, you'll struggle with the same things that all business people struggle with, but you'll overcome it because you're being guided and led by something else other than you. So, yeah.
Absolutely.
Love that.
Yeah, that's a good point. I feel like it took a lot to like give somebody a second and third chance, especially in business. Especially knowing you, because you ain't always like that.
Right. You Master Melvin.
Right.
Man, you feel me? Man, Mr. Johnson out here. Boss Johnson. I said, oh, don't call me that now.
So if somebody wants to work with you or your team, maybe it's on the credit side because they see that you're really knowledgeable about credit, and maybe they want to be a client of yours or interview you, or maybe they want to talk more about real estate. I mean, you've been really successful in real estate. I mean, like for you to be in your 20s, and I mean, this is what, your third, fourth year, and probably not even third year doing real estate, right?
I started learning in July of 2018. I did my first deal last year in July.
Okay,
So
you to be
Still
as
super
successful as you
recent.
are in real estate with the amount of time that you've been in it, maybe they want to talk to you about real estate. But if somebody wants to get in contact with you to work with you in any sort of capacity, how would they get into contact with either you or your team?
So you can find me. I'm Melvin Johnson on Instagram. I'm working it a lot more now. I'm getting some campaigns ready so that it's more consistent.
Yeah.
I should take the advice of my brother and sister here and actually do it, even if it's not. But you know, it's tough. But you can go Melvin Johnson on Instagram. www.maajcapital.com is the website. My email is info@maajcapital.com, and I'm pretty sure there'll be a link for them to spell it because not everyone can spell it yet. But that's the email. If you have any questions, there's a phone number on the website that comes to our team, and you know it'll get to me. If you have any questions about real estate, credit, spirituality, whatever it may be, just reach out. Feel free to reach out. I'd love to talk to you and pick your brain as you try to pick mine. Not this ain't my brain, by the way. It's just the top of my head. but yeah, that's where you can definitely find me on.
Awesome. Nice.
Thank you for coming on to the Abundant Culture Podcast, Melvin. We really appreciated this, and this was like a great talk as usual.
Yep,
absolutely. We appreciate it.
Man, I appreciate the opportunity, man. Love you guys.
Thank you. Love you too. So that's all we have for today, folks. I hope you got as much value out of this as we did. Keep in mind, the only way we can improve is through constructive feedback. So remember to rate and review this episode. Also, you are not the only person that needs to know this super valuable information. So be sure to subscribe and share as well. Stay tuned for the next episode. And remember to always spread abundance. Peace.